Despite the fact that this correction hypothetically should deepen, the market opened very nicely in April. Despite yesterday's April Fool's Day, we indeed had gains. Today, we also have gains, making it 2 consecutive days, rich and green. Therefore, let's check if this bull market can continue, despite the extremely negative sentiment in the first quarter, at least for most of that first quarter, because February and March were, to put it simply, downright awful for cryptocurrency investors. Let's see if what happened somehow negates further prosperity for us in the crypto market and the potential for growth, not only of Bitcoin, but also altcoins. It would be nice to keep an eye on this when they finally start to rise, because that's what we all care about, especially for those who have at least a few percent of their portfolio in altcoins, because that's already something. So I'll just briefly and concisely analyze for you the form of a market update that you really like, the pros and cons of the end of the bull market and the possibility that it could continue. Let's take a look at how the situation structurally looks and what's currently happening. Remember, these videos take me some effort to make. There's no denying it, so leave a thumbs up and subscribe to the channel. I would really appreciate it. And right away, let me know what you think about this idea. It can also be a thumbs up or a comment that maybe next week, maybe in 2 weeks, I'll start a group on Telegram where each of you who is with me on Bybit, and most of you already are, if you're not, register. The link is just below in the description in the pinned post on Telegram. You will have access. You just need to enter your client code into this special group, where you will listen to plays, some descriptions of various market events that are important and will be more meticulously prepared, for example, than just with me. On KDP, there will be analyses, on-chain ones, part of the course, here with ZPP, for you to check out. There will be a trading course, access to live meetings, some live sessions, plays from traders I collaborate with. So all of this will be in one place along with tournaments, various giveaways, and also live meetings for those who win them and which I will fund, so you can get to know each other. Let me know if you'll join. It costs nothing. I'm not trying to trick you into anything. It's free for those who are in my community. Some more details will be coming soon. I hope you're waiting because it will be worth it. Attention. Beware of bots and scammers in the comments, on Instagram, Telegram, and so on. I will never message you asking for money or with an offer to invest on your behalf. It's all a scam. So today, all these financial markets, there's no denying we're focused on one event, which, of course, is about Liberation Day, or the Great Tariff Day. How it looked from just the afternoon. At 3 p.m., President Trump met with his expert trade council. At 5:30 p.m., Press Secretary Carolyn presents the announcement of a historic declaration. At 10 p.m., there is a speech in the Rose Garden. Actually, it already happened because you're probably watching shortly after that time. The president is most likely to announce the introduction of reciprocal tariffs. There are also talks with the media, currently ongoing, and an official photo session for our time. So as you can see, the most important thing is that Trump will start his speech after the American stock market closes. So early in the morning, what you need to prepare for is that cryptocurrencies will react, while traditional markets will only react tomorrow, right? And crypto early in the morning, and now at night, because the exchange doesn't close, they are active all the time, so it nicely shows us this. And in some way, this fact correlates with what might potentially happen in traditional markets. So I'm recording this video around 7 p.m., still before the official announcement from Trump, and I'm patiently waiting to see how Bitcoin and altcoins will react. At the moment, the chart is giving ambiguous signals. Since December, we have been in a local downtrend, making lower lows and highs, but there are a few things that indicate a potential trend reversal. On the long-term chart, specifically the daily chart, a bullish divergence is appearing. What did the price just do? A lower low, but a higher RSI. Additionally, the RSI indicator is still rising, which may suggest that we are witnessing a trend change back to an upward trend. But on the other hand, as a negative aspect, just so it's not too pleasant that the level of those $70-something thousand is still in play, as I have mentioned this level several times. It was a retest of the ADH from March 2024, and there is a very important on-chain level there. So it's possible that we might experience some pain in April, although it's not certain. And according to many on-chain data points, short-term, Bitcoin holders are still under selling pressure, which I mentioned a bit in the last video about Ethereum. If you haven't seen it, check it out. There was a full update on what's happening with Ethereum, what I'm doing, at what price I'm selling it, considering the current market events. So here, in case of further uncertainty, fear, and market entry that might occur, it continues. These short-term holders might sell Bitcoin down to the level of $71,000, where we have very solid support. And when for many weeks on the market, there was fear among retail investors and short-term holders, just like today, when we have 44 points on the Fear and Greed Index. Behind the scenes, the big players were accumulating Bitcoin. For example, Sam Tether is indispensable. The fact that Bitcoin will rebound. And of course, they are the issuer of USDC. And here, they announced the purchase of almost 9,000 Bitcoins in the first quarter. spending a total of $735 million on it. This transaction increases the number of Bitcoins in their portfolio to over 100,000, which are currently worth over $8 billion with an unrealized profit of nearly $4 billion. So they have almost doubled their investment. This purchase is also in line with Tether's strategy, which involves allocating 15% of quarterly profits to accumulate Bitcoin. So you can also see how much this company is earning. And last week, MicroStrategy was also buying. Not for pennies, as Saylor acquired an additional 22,000 Bitcoins for about $1.9 billion, at an average price of $87,000. They were buying Bitcoin precisely in the period from March 24th to 30th. And they currently own over 528,000 units valued at over $43 billion, purchased at an average price of $67,500 per Bitcoin. And also notice that just half a year ago, Sejner only had half of what he has now, so it's clear that he aggressively went for accumulating digital gold. It's obvious that if he wanted to sell it all at once, Bitcoin would probably drop to 70, right? Or to 60,000, but that's not how it's done. These large companies also have certain regulations. Someone oversees them to ensure they don't just toss around these financial markets, so they don't influence what potentially happens with them, and to prevent them from manipulating the price to their advantage or disadvantage. Simply put, these large holders of cryptocurrencies, just like when you're a major shareholder of a listed stock, for example, on the S&P 500, they cannot and should not be sold all at once. Often, these are deals, OTC, also not on exchanges, which doesn't immediately affect prices directly. But in the long term, it causes the supply of Bitcoin to change, where over time it might react. And it simply positively causes them to fall out of circulation. If such a person or entity continues to hold them, then the price can increase as a result. So, it's known that Saylor, his persona, his purchases stir up a lot of controversy. But one thing is certain, his strategy has a huge impact on the market, and it shows how seriously they take the future of cryptocurrencies. So, other companies are inspired by all this, and over time, they buy more Bitcoin. More and more. For example, Metaplanet, a Japanese company, purchased Bitcoin worth a total of $13 million a few years ago. It may not be a lot, but such purchases are still happening all the time. And most of these reserve assets in the balance sheets of public companies, this is a strategy that is relatively new, not yet fully proven or documented. It is a kind of concept. And the question is, how many public companies are currently implementing this strategy? I'll show you and tell you in a moment. The point is that they don't plan to get rid of them too quickly, because as the name suggests, these are strategic reserve assets, right? So it's something you touch in case of emergency, not something you actively operate with, very actively. And according to the data, Bitcoin Treasuries shows, there are 89 such companies. The vast majority of them are not leaders in their industry, but I suspect that such a number is much more than was ever expected before. When the first company ever bought Bitcoin, it was a wow moment, and we're talking about publicly traded, large companies here. And you know, it's a new concept, as with most things related to crypto. The question is, will we see more such actions, which would support the market? And according to the latest report from an analytics company, there's one called Architect Partners, by 2031, quarter. Listen, 25% of the companies in the S&P 500 index will have Bitcoin, will have it in their reserves. So someone tell me that this is all a temporary trend when it comes to the entire cryptocurrency market. Well, it's not, right? If 1.4 of the largest companies in the world in the States, at least the largest companies in the States, will have Bitcoins, it means that it's already mainstream and very common, which will probably cause higher valuations in the next cycle by that time. On-chain, we also see, it shows us that there is currently an increased accumulation of Bitcoins by long-term holders. In the current cycle, a unique market dynamic is simply developing with alternating waves of distribution and accumulation by long-term holders, which creates a more controlled and stable market environment. On this chart, you can also see the waves of distribution and accumulation by these long-term holders. The accumulation phase is currently taking place, and this balance between the waves suggests that the current market is simply in a much more balanced and mature phase than in previous ones. Cycles. And if this trend continues, meaning that these periods of intense profit-taking will be systematically balanced by reaccumulation, it could favor the further continuation of the bull market at a more stable pace. Which is what we would like and what I mentioned. It would be great if we could see, after this potential death cross, for example, increases in Bitcoin of around 10 to 20% monthly for 6 months, which would give us $150,000 per Bitcoin. By the end of the third quarter, you know, there wouldn't be such euphoric peaks or equally dramatic drops if this situation came to pass. And this also points to the possible emergence of a new type of cycle, which, as you know, has changed a bit because not all cycles are the same. That's first. Secondly, there's a lot of talk that this cycle isn't working and doesn't work like it did before, especially when it comes to altcoins. Thirdly, we might have been a bit deceived here, or somewhat here. Indeed, the situation is different because currently, this cycle could potentially develop into something that makes people less prone to panic, as it will be more controlled by investors with a longer investment horizon, which might also extend the duration of this bull market a bit. Looking at some newer data here, notice the rising open interest since mid-March and the increase you see before your eyes. This suggests an increasing involvement of investors in the leveraged market, and the rising open interest can, of course, as history has shown many times, have a significant impact on Bitcoin's price trend. It often indicates that more investors are engaging in the market, which simply may suggest that they are expecting a trend change. No, that's simple. But moving on, to be honest, all the attention. At the moment, the market's attention remains focused on Bitcoin, and other cryptocurrencies are clearly in the shadows, right? You can simply see it on the Bitcoin dominance chart, which is steadily rising, currently exceeding 62%. There's no sign of a trend change or any narrative suggesting that this will happen anytime soon. In my last material, I mentioned that the appetite for risk will only increase when the Federal Reserve improves monetary conditions. For now, Bitcoin is leading the way, attracting a significant portion of the capital in the market. Particularly, institutions made substantial purchases here in the first quarter. According to the company, look at this, Cryptoquant. Public companies bought nearly 92,000 Bitcoins in the first quarter of 2025. These are just public companies, which makes it about 0.5% of the current total supply. Despite the visible accumulation, it was not reflected in the price, unfortunately, because Bitcoin fell from 94.5 to 82.5 thousand. But if these purchases hadn't happened, it would have been even worse. Or they might just take effect with a delayed reaction when the market sees that the supply is indeed smaller. Because the purchases could have been made on OTC, which is out the counter, which means they weren't detected by market makers. Caught. People didn't see this traction, these purchases or sales, which might just have a positive effect with a delayed reaction if it hasn't already. So, this simply suggests that Bitcoin is attractive to larger entities, and the correction, it simply doesn't discourage them from buying, so they assume that everything will continue to go well. And in this post, another one here, we have confirmation of what I just mentioned. The biggest buyers in the first quarter were Tether and MicroStrategy. They announced the plan to raise capital exactly a week ago, and we see that they quickly managed to achieve this goal because we are getting news almost every day confirming that this cycle is unique in terms of Bitcoin adoption as a strategic asset by larger investors worldwide. This trend is also visible on Glassnode, as we have an indicator here that shows the number of entities holding 1,000 or more Bitcoins. And look at this. How much this current cycle simply differs from the previous ones is visible to the naked eye, because in the two previous bull markets, whales started selling in the halving year when the price had seen significant increases, but was still far from its cyclical peak. And that was the process of so-called dressing the street in Bitcoin during the upward trend while it was ongoing. And notice now exactly, when the number of whales was hitting its low. Well, twice it was around the cyclical bottom for Bitcoin. That's when the bigger players started slowly buying and look at how it looks in this cycle now. Since April 2023, this indicator has been in an upward trend the entire time. We still don't see any signs of distribution from the whales, which, in my opinion, translates to two key conclusions. Firstly, it suggests that Bitcoin is gaining global legitimacy, and this visible accumulation by governments, meaning public companies, could help it reach even $150,000 to $200,000 by the end of 2025 if monetary policy is favorable. And secondly, the lack of distribution from Bitcoin whales certainly affects the condition of Ethereum and altcoins in some way, because in previous cycles, investors would exit Bitcoin earlier to enter alts, which offered higher returns. In this cycle, we haven't seen that yet, so there hasn't been a massive migration from Bitcoin to alts. There was a temporary shift, and then, a retreat back to Bitcoin rather than staying in those altcoins for good. And this also reflects greater trust in Bitcoin. This translates into its steadily increasing dominance. And the second, most important issue, which I will tell you about now, is that the situation with the Fed and their current monetary policy favors Bitcoin itself. Ublead. The first is that BNB might have another moment of glory in the future and could break through significantly. All-time high, because Wanek has filed an application for an ETF for this altcoin, so we'll see how it behaves. And regarding the rest of these altcoin crazes here, this race continues because more applications for ETFs are being submitted. Besides the application for Solana, XRP, and Litecoin, in March there will also be an application for an Avalanche ETF, which is also interesting. There is also one altcoin that is doing well. Of course, I'm talking about the stablecoin on USDC. I know April 1st was yesterday, but still, its capitalization is reaching a new all-time high, amounting to $60 billion, and the market cap has doubled within a year. Also, another big altcoin that I have in my portfolio. By the way, I'm curious. Do you want to know about it? A dedicated video. Chainlink. Here we're talking about it, about the link. They launched payment abstraction, which is a new system that allows you to pay for network services with gas tokens, such as Ethereum or BNB, or with stablecoins. And what's crucial is that the tokens are then automatically converted into Link thanks to the new system, which simplifies integration, meaning Link increases adoption. Every fee generates demand for it, which strengthens its tokenomics, so the system ultimately rewards Link stackers with real network fees. And as a result, this works in such a way that this change could prove to be very bullish for the tokens in the long term. I also believe that the altcoin market will be doing very well. The question is, when will it finally happen? In a few months' time, many indicators suggest that sooner or later, alt season should also occur. Third time's the charm. We had, alt season last year in November, at the beginning of December. We had it in March last year, but maybe after half a year. It might return again somewhere around June or September. We'll see, but it's worth being prepared and just picking out some of those favorites. Slowly, it's also approaching QE, which is the period of monetary easing. At the last FOMC meeting 2 weeks ago, we had a pause, but at the same time, Jerome Powell said something very significant for the risky asset market, because despite the pause, the Fed indirectly lowered interest rates by deciding to slow down the pace of reducing its holdings of Treasury bonds. This was one of the most important events in March because the market simply received positive information that QE is being slowed down from April 1st. The Fed is now selling $40 instead of $60 billion a month, and the Federal Reserve has adopted a strategy of slowly transitioning from tightening to quantitative easing. As for the plans to cut rates by 100%, for now, in May, 83% of the market is still betting on a pause, and the proportion can of course change. For example, in favor of cuts if the Fed receives signals of a cooling labor market and falling inflation, where we are still waiting for this information. Just yesterday, for instance, the JOLS report was released, which showed that in February there were fewer job openings than expected, which is potentially an indicator of a decline in employment, but not a complete one. And at the time of recording this material, the non-farm employment report will also be released. And on Friday, remember that we have NFP Day, which is another very important labor market report. The stock market usually reacts strongly to the release of this data, so be careful with your leverage positions, secure them again, maybe with stop losses, and so on. So if the data this week were to show a deterioration in the labor market and the inflation readings in the coming weeks showed a decrease in inflation, this would be an argument for the Fed to be able to lower interest rates. Already in May, for now, the chance of cuts in May is low, but in June, most of the market is betting on further cuts of 25 basis points and another cash injection into the markets. So, ultimately I am counting on it because monetary easing has a positive effect on risky assets, namely our cryptocurrencies, our altcoins, our Ethereum, our Bitcoin. So I will keep telling you not to focus too much on local market fluctuations because the forecast for the next few months is still positive. So especially today, with these Trump tariffs, they might slightly increase investor uncertainty, but in the long term, we know that the Fed will be fixing liquidity, and many indicators suggest that interest rates will be lowered again. It's possible that QE will end in. Finally, take a look at this entry, which shows the correlation between the liquidity cycle and Bitcoin's valuation. Every time this green dot appears on the chart, Bitcoin enters the banana zone within the next few to several months. And now we are in the early stages of improving liquidity. And if this trend continues, cryptocurrencies should absorb this new capital in the market, which will result in increases. And as an interesting tidbit, I'll add here the market risk indicator you see in front of you. That's what it's called. It has been declining since mid-January, which is a good sign. The most important thing is that the yield on 10-year bonds is falling, and this means that the debt market is not signaling to us that a major crash is imminent. Therefore, the declining yield also means that the gateway for capital flow into risky assets remains open. I'm betting on this, that even in 2025, there will come a time when cryptocurrencies will benefit from this and when things will still be good. So if you're curious about what will happen next, stay on the channel longer, subscribe. Thank you very much for watching. All the links are in the description to the Telegram, to the newsletter here, where there are reports, to this card, KS, where you have up to 18% cashback, etc. Take a look at everything. There's also a trading playlist there, and in the top right corner, I'm pinning a Bybit exchange guide video for you. If you want to use the exchange that I use and receive all the bonuses that are listed in the post at the very top of the description, I warmly invite you. Take a look, take care, bye.